Isn't that fascinating? We've got all of this hype around the Ethereum treasury companies that Tom Lee with BitMine continues to accumulate ETH, yet in the last days Ethereum is underperforming the rest of the market. It's doing worse than Bitcoin, it's doing worse than most other altcoins. The question is why? Is this a potential dip that's worth buying, or is this the start of a turnaround? We're going to look at on-chain data, the data most people aren't considering. We're trying to figure out what's currently behind this price action. Because here's the situation. In the last month, Ethereum lost 3%, while at the same time, Bitcoin gained 5%. Yet apparently, the balance of the Ethereum ETF purchases plus the strategic Ethereum reserve companies tends to go up over time. This here is the Ethereum market cap relative to the Bitcoin market cap. It's a chart that starts in 2017 and we are trading in a range. We have bounced in the middle of April of this year. But now, in the last month, Ethereum has taken a breather. Now, once we look at the data in a bit more detail, there is a clear slowdown, unfortunately. Here's the number of Ethereum that's held by the major ETH holding companies. There is BitMine that continues to accumulate, and there is the rest. The rest hasn't bought anything, really. And BitMine has clearly slowed down their purchases as well. That's what worries the market. At the same time, we also see zero accumulation through the Ethereum ETFs in the last few days. The fundamental problem really is that we don't know how consistent the demand for Ethereum is. Because for Bitcoin, we've got much more history. Here is the balance of the Bitcoin ETFs over time. Now what we see here in the early days, this is not an ETF, this is the Grayscale Bitcoin Trust mainly. But here over the years, we rather see an acceleration of the trend. It took 4 years for the ETFs to acquire 0.8 million. It took less than 2 years to almost double that. A very similar trend can be observed for the Bitcoin treasury companies. Again, it took a very long time for Michael Saylor and co. to acquire 0.5 BTC. So that's roughly 4 years. And then it took 1 year to add another 0.7 million BTC. And so the market, I believe justifiably so, is questioning how sustainable is the Ethereum demand. For Bitcoin, it's clear that there will be continued purchases. For Ethereum, there's more and more competition, right? There are more and more smart contract platforms that compete for Ethereum market share. Here is the Ethereum dominance over time. So how much percent of all of crypto is in ETH? This tends to trade between 7 and 21%. Since the middle of April of this year, this rebounded massively. We talked about a potential bounce at the time. Feel free to check out the videos about Ethereum at the time on this channel. But since ETH's relevance within crypto more than doubled, since the outperformance is more than 100% in the span of less than half a year, we now see profit taking. Now, this is not just a problem for Ethereum, it's also a problem for the altcoins, because many altcoins are directly coupled with Ethereum. So have a look at those liquidity pools. They are all versus wrapped Ethereum. So when Ethereum goes down by 10% because people sell the ETF or because people sell spot, at the same time, automatically, all of those altcoins also go down by the same percentage points. Many altcoins don't get priced in US dollars, but in Ethereum. And so the Ethereum price has a direct impact on the valuation of those alts. And so here is Ethereum relative to the others market cap. Again, since April of this year, we've seen ETH outperform, but we are historically high, and there is a good chance that ETH is getting sold off from here. Let's not forget the past. What happened in 2022 when the capital on the ETH chain suddenly crashed by that much? Why did we see such a massive contraction? The answer is inherent hidden leverage. So this is the total value locked on ETH, and it peaked at more than 100 billion in November of 2021. But then came DeFi winter, and the total value locked went down all the way to 20 billion, an 80% contraction. What happened over here? And could this potentially repeat again? The decentralized exchange trading volume also fluctuates together with the total value lock. But what isn't just fluctuating, what's actually growing is another wave of hidden leverage. And that's the leverage through the perpetual futures market. Have a look at this. This is the Ethereum price over time in yellow and the open interest of leverage in green. We can see that Ethereum's price is at very similar levels to 4 years ago. But the open interest grew from 12 billion all the way to more than 50 billion. So there's way more people now betting on the Ethereum price. And there are arbitrage bots that trade between perpetual futures and the spot market. When there's more bets on the price, then the spot price tends to go up as well. This is all just short-term leverage. And it's not obvious leverage, right? It's leverage hidden in the perpetual futures. Now, when Ethereum goes down by 20, 30%, that down movement could get accelerated through deleveraging from the perpetual futures. Because why do people use perps? It's in order to bet on Ethereum with a 10x, with a 20x, with a 30x. But those kind of positions get liquidated as the price goes down. So there's a cascading liquidation event, something very similar to what we have seen during DeFi winter. The DeFi winter in 2021 was an unwinding of stablecoins. Stablecoins that had been collateralized with cryptocurrency. As the cryptocurrencies went down, the stablecoins had to be redeemed as well. The stablecoins even lost their peg, and that led to even more selling. And something similar could happen for Ethereum as well. If open interest was to go back down to 10 billion, then the Ethereum price would be much lower than it was in 2021. The current price is getting artificially inflated through the perpetual futures. The perpetual futures, so the bets on various crypto assets, got that big that the market cap of the leading exchange, Hyperliquid, is now almost 4 times the market cap of the leading decentralized spot market. So Hyperliquid has 12.6 billion in market cap, Uniswap has only 4.7 billion in market cap. And that's the big problem. Some people say that this time is different and that Ethereum cannot crash anymore 60, 70, 80% because of Wall Street buying. But I tend to disagree, because we have seen a more than 70% crash for Bitcoin. And we already had Wall Street buying Bitcoin during the crash. This is the number of BTC that's held by Strategy, formerly known as MicroStrategy. Here is the Bitcoin price relative to the average cost basis of MicroStrategy. And we can clearly see that MicroStrategy has to buy at high prices. They're not able to buy that much at low prices when they're in losses, because that's when their collateral isn't worth that much either. So they are forced to lever up whenever the price is high. So the ETFs and the treasury companies, they are stabilizing the price at higher long-term levels, but they're not the buyers during a bear market. They simply can't be, because that's when the liquidity dries up. So I'm not saying that it is a bad thing that Michael Saylor and Tom Lee is buying Bitcoin and Ethereum. The only thing that I'm saying is that they cannot buy enough that there won't be any bear market anymore. Bitcoin can still drop despite the purchases through the treasury companies and through the ETFs. And I do believe at some point we will see an unwinding of that leverage, the 53 billion. It might not happen tomorrow, it might not happen in the next year, but it could very much happen as an accelerating factor once the purchases slow down even further. And that could then bring the Ethereum dominance down to its 7% again. Now, there is somewhat of an argument to be made that altcoin season might be imminent. And so that's based on the others dominance chart. It shows how much of all of crypto in percent is currently in the altcoins that are not in the top 10. And this seems to bottom out at very similar levels, and it might have just bottomed recently. In the past, when we were at similar levels, the altcoins outperformed the rest of crypto by more than 300%. So I understand this argument, but there's a bit of a problem with the argument, because the other dominance measures the market cap, but market cap is a very different thing to prices. There's a dedicated website called Tokenomics AI that does nothing but measure the token inflation of various altcoins. So let's have a look at Aptos, for example, here at number 1. This is the Aptos price relative to the altcoin market cap. Since March of 2023, this went down by 88%. And the reason is an ever-expanding token supply. As there's more and more tokens hitting the market and supply is higher than demand, then of course the price has to go down, at least relatively speaking. This is the Aptos market cap chart over time. It's at very similar levels compared to February of 2023 at roughly 3 billion, so barely a change. But in February of 2023, the Aptos price was at $18. and now it's at $4.39. So this is how much impact token inflation actually has. The other's dominance does not look at prices, it only looks at market caps. But we do not get market cap returns, we get price returns. Market caps can be unchanged, prices won't be unchanged if the supply just keeps on increasing. Now, how much of a problem is this really in the grand scheme of things? Is this just a few select altcoins, or do we see this on a broader scale? The answer is somewhat depressing. We unfortunately do see this on a broader scale. So each week we see roughly 1 billion worth of token unlocks. If we do not see at least 1 billion of additional demand coming into the altcoin market every single week, then the prices have to come down. The other's dominance might be unchanged, but the price of individual altcoins definitely do get negatively impacted. Aptos is currently the 42nd largest cryptocurrency. It's just an example. Let's have a look at the top 100 cryptocurrencies. In the last year, Bitcoin went up by almost 100%. We've got 26 out of 100 altcoins that did better than Bitcoin. 73 altcoins did worse than BTC. And so here's what I personally do. I'm simply just betting on bad altcoins to continue to do worse. So we can just flip this chart around. This is the Bitcoin price relative to the Aptos price. At the bottom, we've got the others dominance again. So the others dominance did not change at all in the last 2 years, right? It went flat while Bitcoin's price relative to the Aptos price appreciated by 400%. So this is really where I believe the alpha in crypto is. It's the market inefficiency of highly inflating altcoins. I'm following this strategy already for roughly 4 years. So I'm betting on poorly performing altcoins. I'm betting on them to go down further, while I'm betting on rising Bitcoin, Ethereum, and Solana. And because of that, I outperformed just dollar cost averaging into Bitcoin. Dollar cost averaging into Bitcoin is shown here as this light gray line, but I got the performance that's shown in the black line. So there is a way to beat the market without trying to find the few winners. We can simply bet on the market structure, on the constantly increasing token supply of many altcoins. It's maybe not as straightforward as just buying a single token. Some things have to be learned, but that's why I made dedicated videos on the topic. I try to make this as simple as possible, so there's really only 2 videos that have to get watched. The first video is using perpetual futures to bet on relative valuations. The second video is risk management with relative valuation bets. Once you've watched this 1 hour of content, you know exactly what to do to get this kind of performance, to set up positions like this. After you've watched those 2 videos and you've joined the community, I will send you my favorite trade that looks very similar to Bitcoin relative to Aptos. If with that trade you do not make money after 1 month of holding the position, then I will refund the membership fee to you. So those $125 are actually not what you're risking. If you don't make money with this favorite trade, you just get that money back. Just message me and I will refund you, no questions asked. Of course, besides this favorite trade, I will also share every single trade that I execute in real time as well. You can simply just copy trade me. A link to Premium will pop up directly on the screen over here. Just click on that. It will lead you to the website. If it's your very first time here, feel free to subscribe as well. I publish videos on YouTube regularly. See you next time on YouTube or see you in Premium. Cheers!